I set out to start this podcast, it was my intent to not bring finance into it. Finance was my day job, and this was a passion project which would be focused more on other things outside of my day-to-day world. With everything that's going on in the world and in the markets right now, I'm getting a lot of finance-based questions, and I said I'd put aside a special Q&A to answer them and hopefully bring some peace of mind to some people in any way that you can have it with everything else that's going on at the moment. So I will start from the order that these questions came in and do my best to work my way through them. The first one was from Ashley13, who said, "What's good to invest in share-wise at the moment?" This question has reminded me that I need to create a disclaimer for the entirety of this podcast, which is that nothing that I say in this episode will constitute personal financial advice. I'm going to be talking about what's happening in the world generally, but it's impossible for me to give advice to everyone at once because everyone's situation is different. What they should be investing in is different, and what they should be doing with their finances in general is different. So I'm going to answer this question in particular very generally, and there'll probably be a few more in here like that as well. The first one, again from Ashley, was what's good to invest in share-wise at the moment. So let's talk about what's happening in the markets at the moment. Donald Trump, the president of the USA, has imposed a trade war on pretty much the entire world by implementing tariffs. And he describes this as medicine, trying to fix some trade debts that the US has. But the world hasn't taken lightly to it, and they don't really know what's going on. And because of that, the markets are full of uncertainty, and they're in a bit of a tailspin as people are withdrawing their money from the markets. Typically, whenever you are in a downturned market, things that hold steady and fast in that period are commodities. So things like food, things like toilet paper. No matter what happens in the trading markets, people are always going to need both of those and other essentials as well. So they are typically holding on, although they have seen a slight dip as well. Often precious metals tend to act inversely from the global markets. So when we have crashes like this, we often see a pickup in things like gold. This past week, gold's been fairly up and down as well. It seems like people really don't know where to put their money, and even crypto, which often moves inversely from the regular markets, that's seeing a downturn as well. So right now there is no safe haven, so to speak, where you can put your money and you can be sure that it will increase in value when you're looking at stocks and shares. So what people are turning to at the moment, getting gate crashed by my little dog here. What people are turning to at the moment are things in the US called treasury notes, which is something where you lend your money to the government for a fixed period of time, and then the government promises to pay you back along with an interest rate. For those of you outside of the US, you probably won't be looking at US Treasury notes rather, but there are other governmental bonds depending on the country that you are in. You can also have private bonds with companies where, again, instead of being subject to the share market and the value going up and down, you're instead promised the money by the company. And as long as they don't default, meaning that they don't pay their debt or they aren't able to pay their debt, and they should. So that's what is happening at the moment. The US has announced that the treasury note interest rate has just gone down, and that typically happens when there is more demand for it. So people are taking their money from the stock market and putting it into treasury notes. So that could be an option as well. For those of you that aren't familiar with notes or bonds, then yeah, fixed deposits in a bank is what people look like they are putting their money into at the moment. Now, in the long run, this is suboptimal, because they always, over the historical period of the markets, have underperformed stocks and shares in the long term. Whenever there's periods of uncertainty and people aren't comfortable taking the high levels of risk associated with stocks and shares, then bonds and treasury notes tend to be where they end up. Okay, so next one is from Mauricio Mexicanos. If you were to recommend a free platform/course to learn to better manage money, what would it be? I have not really used many free courses or platforms. I think a good place to start, if you're looking to understand the markets better and what's happening at places like the Financial Times or Bloomberg, that's a good place to start. If you're looking for money habits, then I would look at someone who is reputable and trustworthy in the industry who frequently talks about that stuff. In the UK, we have a guy called Martin Lewis, and he is renowned for just sharing generalistic good advice for the masses. The problem with going too deep into that is, again, you don't get that bespoke advice for your circumstance, so it can be hard to be optimal when that's what you're taking it from. But when you're just getting started and you haven't got a large portfolio that you want to manage, then generally getting advice from someone like that would be a good idea. In the US, I know there are alternatives to Martin Lewis. I forget this one guy's name, who again has got quite a big following and talks quite holistically about those money matters. But again, I would look for someone that's reputable, that, you know, gets called onto the news to talk about their views. Avoid finance influencers on social media as a general rule, I would say. Look for them in places like news reports and then follow them on social media from there, because there's a lot of noise from people that want to try and make money from followers by talking about money. So I wouldn't go seeking them out on Instagram or TikTok or anything like that. Dave Ramsey, that's who I was trying to think of in the US. So if you're in the UK, I'd go for Martin Lewis. In the US, Dave Ramsey. I haven't had time to listen to everything that they've got to say, by the way, so I can't guarantee that it's all good advice. All I would say is they are fairly reputable names in the industry, and it would be good to go to educate yourself on basic financial matters. From eBusy, tips for someone who wants to understand finance in the beginner phase. Webs is overwhelming. I think this is a pretty similar question to the one that we just had before. I have been talking about it for quite a while, that I am bringing out a finance course. It's just been very difficult getting that over the line, but I've created the content for it. The goal is to have it out in the next month or so. So hopefully that will be able to help you. Otherwise, as I did say to Mauricio, then look at Martin Lewis in the UK, Dave Ramsey in the US, or if you are elsewhere in the world, then drop me a message and I'll see if I can help you. From Meduardo, aside from the news, how do we know when the market will be bound back up? No one does. No one knows except potentially Trump and his inner circle, because they might be playing some game. One theory that there is in the market at the moment is that Trump is deliberately crashing the market for his own personal gain and personal agenda. I'm not saying that that's definitely true. I'm not even saying that I believe it. I'm just saying that it is one theory out there. And the honest truth is, I'm a private wealth manager, and all of my colleagues that I speak to on the regular, they have no idea what's going on here. And of course, there are those on social media that are coming out saying, guys, like, we know exactly what's happening here. We've seen it all before. We haven't. And we're calling each other after our calls with clients being like, how are you handling this? It's a tough time. It's like doctors in a pandemic where we've not seen this virus before. And we're trying to compare it to other viruses. We're trying to compare it to how the medical profession has dealt with it over the course of history. But this new one is worrying. And, you know, I have clients that turn to me and say, hey, what are we doing? And all I can do is be honest. I can say what I'm doing with my own personal money. I can say what I'm doing with other clients. I do genuinely believe that this will just be another blip in the markets in a long history of blips. And, you know, I can pull up a chart that will show you the stock market over the last 140 years, and it will plot every historical world event that has crashed the market and has been a doomsday event. And we've seen so many of them in the last 20, 30 years. And of course, the markets have just continued strong. And that's the point of this graph. You see all of them from the Great Depression, the Great Recession, World War II, World War I. You've got Vietnam War, and literally there are hundreds of points on here where if it was happening in the world right now, we'd be worried. And it has always dipped and then continued on its trajectory upwards. It is my belief that this is the same thing. It's just hard when clients are asking me, you know, what do we do in this moment? Because even though I believe that that's the long-term trajectory, if it's going to drop by another 20% before it starts going up and heading in that direction, then it's my head on the chopping block, right? So what I would say, if you are not a big risk taker and you wouldn't be comfortable with the idea of losing 20+% of your money, I wouldn't be looking to put it into the markets right now. it's an extremely turbulent time, and it could be the perfect buying time. We could see something in the news tomorrow that Trump's like, April Fools or whatever. And then, it's, the markets are all coming back to stability. Everyone's putting the money back into them again. But equally, there is the chance that it's going to go 20% down. No one in the world has a crystal ball and can predict when markets are going to rise or markets are going to fall. The only way that you can do that is if you are doing insider trading or market manipulation, which is very possible that Donald Trump is doing, but we are not privy to that information. And yeah, it's a tough one to answer with any certainty. And anyone who is telling you with any certainty, be very, very wary of them. They probably don't have a clue what they're talking about. From Marie Evelyn, are ETFs the best way to, in brackets, safely invest at the moment, or do you recommend differently? Again, disclaimer, this is not advice without seeing your personal situation. ETFs, that stands for Exchange Traded Fund. And what it is a collective of stocks and shares brought together in one fund so people can be diversified and own many assets without having to go through the turmoil of buying them all individually and then managing them all themselves, right? So they are typically better for a less sophisticated investor who just wants to be in the stock markets. They don't have time to be day trading and studying markets bottom up and top down to work out what the right stocks and shares are going to be. They are a good way to have some diversification and a cheap way to manage multiple assets as well. They are often, more often than not, a really good foundation of a portfolio to build around. Again, at the moment, if you're looking at just getting into the market, ETFs are comprised of stocks and shares. They are going to be just as subject to the volatility in the markets right now as individual stocks and shares, only with the added benefit of diversification, as ETFs typically hold multiple assets. In ETFs, you can have area-specific ones or asset class-specific ones as well, and you can have general multi-asset funds, which you could be looking at. They are generally, if you're looking to build an investment portfolio, a really good place to start. Again, the kind of theme of this podcast is a topical one with what's going on in the world at the moment. And again, it is a turbulent time to be putting your money into the markets. Another one from Marie Evelyn, stay away from trading with all the insecurities or best time to start. Again, it's that crystal ball one. I wish I could tell you that it's the best time to start. Typically, whenever markets do dip, it is a good time to purchase because the value has always historically returned to its highest point and then surpassed it. But again, it could be dropping another 20, 30% before then. We just don't know. What I would talk about here is a concept of dollar cost averaging, or it could be any currency cost averaging if dollar isn't what you trade in. Now, how this principle works is instead of investing all of your money into the market at one time, you spread it out across multiple points. So in practice, let's say I have $100,000 to invest right now and I put it all into the market and then it drops by 20%. I've lost $20,000. Now let's look at it another way. Let's say I have $100,000 and this week I invest $10,000 and it drops by 20%. So next week I've lost $2,000, but I buy in again. My $10,000, I put in the same amount again, and I actually end up with 25% more shares than I bought for $10,000 last week because the share value has fallen. The amount that I can buy is greater. So as the market goes down, I just keep buying. Every week I put in another $10,000. Now when the markets come back up, I've actually done a lot better than the person who just invested all of their money in one go because I've ended up buying so many more shares because I was buying it on the way down. I hope that principle makes sense to people. And if it doesn't, let me know in the comments. I can send a visual depiction, which will make it a lot easier to comprehend. Right now, I would be a big advocate for dollar cost averaging for a lot of people because it will reduce the overall volatility as you purchase it at multiple different price points, probably on the way down for the next few weeks and also on the way back up. So if I had a large sum of money and I wasn't particularly confident and I wasn't willing to take a big risk and see a big downswing, I would be looking to dollar cost average right now. Okay, next one. What's the effect of that Trump's order to a regular citizen in Indonesia? From Ray DP. Good question. There is an expression in finance and in global politics that is, when the US sneezes, the world catches a cold. And whatever happens in the US, it is the market leader, and it has effects on everyone else. On Indonesia specifically, I don't know exactly how that's been affected. All I can say is there is no safe market right now. There is nowhere that is reaping the rewards whilst the US is going down. It is bringing the rest of the world with it. And there is no safe alternative at this moment. There will be some economies that rebound quicker than others. But generally, we are all in this one, and it's not looking like there's a safe place to hide. Sarah Visconti. I'm 24 years old, just started working. Any financial advice for me? Thank you. The younger you start, the better the position you will be in. If you can find a way to be saving 10% of your income every month right now, that will compound over time. If you haven't come across compound interest before, have a look at it. To summarize it very quickly, compound interest is interest on your interest. So if I invest £10 this year and it goes up by 10%, I will have £11. Next year, when it goes up by 10%, I will gain another £1.1. So I'll have £12, 10 pence. It sounds small at first, but when you look at the snowball effect of it, is absolutely crazy how quickly it picks up and it starts going. If you can start investing now at 24, if you compare that to 34 with the power of compound interest, it's going to make a difference of 6 figures in your retirement, over $100,000 comfortably. You can run the projections yourself, and I've actually built a tool where you can do that. I will include a link to it in this bio for anyone listening that wants help, because I've seen some other questions about budgeting. I've put together a tool where people can do this. They can calculate how much they'll be able to save. They can calculate how best to pay off their debts. I was saving this for the course, but I'm just going to put this out there because I think it could help a lot of people. So have a look in the bio for the link to that. Okay. From Jazz T00. My dad is retired and is stressing about the crash. He wants to pull dollars from his Roth. Should he? Again, Jazz, I can't give a definitive answer on that based off that information. What I would do in your dad's situation is I would sit down with a wealth manager, with a financial planner, and share the details of how much he's got in there, how much his expenses are, has he got any debts, has he got any other assets, and draw a holistic picture to see where it's at. Once you can see where you're at right now, then you can add in scenarios like, okay, what's going to happen if the market's dropped by another 20%? Is it going to screw me? Is my retirement plan going to be in trouble, or is it going to be comfortable? And do I have time to wait out this inevitable return? That's what I'd be looking to do. If your dad doesn't have anyone like that, I can have a chat with him as well. Just drop me a message and I'll be able to help. I can do him a retirement plan and then I'll be able to give him some answers. From Wonderlala, is it good to buy stocks now since everything is low? I think I've answered that one already. If you've got the stomach for it, whenever the markets are down, it is an opportunity to earn money. As long as you're comfortable with the fact that you might be getting in a bit soon and it might continue down. That is personal to you. From Faisal, I'd like to start to manage funds after I graduate. Do you have any recommendations such as making cash flow? If you are managing funds, typically you don't start out with your own money. If you're talking about it as a profession, then typically you would come in as a junior investment advisor and you learn from someone else in order to create a fund. If you're just talking about for yourself, then yes, it's just going to be a case of working hard and saving money and building it up and getting into the investments as soon as possible, again, because that compound interest will roll up. Okay, from Simply Adivi. Hi, 27-year-old from the Philippines. How do I start managing my finances? I don't know where to start. The first step is to start planning it and work out what you've got in terms of income, what you've got in terms of outgoing, where your funds are at the moment and how they're performing. And again, my course is supposed to be out by now and be the place to help you with that. If you're listening to this podcast, Adivi, drop me a message and I will give you access to the tools in the course early, and it will give you an opportunity to get involved and just start planning out. And then when the course comes out, then yes, I'll be able to help you with the rest of it. Pete Britton, as a civilian, can you approach private banking for debt consolidation solutions? Private banking is typically not the place that you would do that, Pete. and you will find debt consolidation solutions from more accessible means. Private banking is typically for high net worth individuals that would have at minimum sort of $1 million in assets. And so the debt, when it comes to those kind of individuals, is typically a business play rather than, something that needs managing and consolidating. So private banking wouldn't be where you went for that one. From Stephanie Sinek. Is looking for opportunities abroad a good or a bad idea during this period of time? I'm not sure what you mean by opportunities. If you're talking about opportunities as in opportunities to invest abroad, I think, again, that's kind of already been covered. Investing anywhere at the moment is at the USA's behest. It's depending on what they're doing as to how the rest of the world is going to react. If you're talking about looking for opportunities abroad as in a place to live or a job opportunity, don't let what's going on in the stock market change that. You will find opportunity to go and live and work overseas no matter what's going on in the stock market. I'm sure of it. From Peaches, I think it will all work out and be fine. What is your opinion? I agree, Peaches. I think it will all work out and be fine. It's just what's going to happen in next week and the week after that, But that's what I'm saying to my clients. Long term, it's going to be fine. How are you going to feel if your portfolio drops by another 20%? If you're not comfortable, then we pull it out and we don't take the upside that we could earn the 20% back. We just lock in the loss that we've got so far because we're more comfortable with that than rolling the dice in the short term. If they are comfortable and they are in it for the long term, like one of my clients, I just replied saying I love him. I had so many of my clients message me being like, shit, what do I do? What do I do? And my other client messaged me saying, hey mate, I'm sure your phone's going mad today. It's like, now's a good time to invest more money, right? Like how much should we go? And it's different mindsets for different people, right? So yeah, long term, it will work out and be fine, I'm sure. And if it doesn't, then it's probably going to be the end of the world. So it doesn't matter, does it? From EdrinCon63, should I pull my 401k? I assume by pull your 401k, you mean just cash it out, disinvest it. Again, not personalized advice without knowing the details. If you are going to need your money in the short term, then that might be something you want to look at. If you're not going to need your money for 20, 30 years because you're away off retirement, then I would be more inclined to be leaning towards just riding out the storm because in the long run, this will likely just be another blip in the many blips in the history of the stock market. From Ramakurf, how old are you? I am 30. From My Black Dahlia, after doing my research, I realized we were being taxed. Trump is doing a reverse Uno. No. This is a big political myth, right? And it's something that a lot of people don't realize. They love saying tax the big corporations and, it's political agenda to be like, yeah, we're not going to tax the small guy anymore. We're going to tax the big companies. The big companies getting taxed, it doesn't come out of their profits. They pass it on to you. If they add a 20% tariff to everything coming in from the UK, it's not the UK that pays that. It's not the UK government being like, okay, we'll pay that 20%. It literally gets passed on to US customers. If you're adding a 20% tariff on stuff coming into the UK, then yeah, it's going to cost 20% more when it gets to the US because that's just how it works. So, Trump's putting out that this is a medicine. This is, just making things fair. Acting like he's, evening the playing field. It's just consumers that are going to be bearing the brunt of this. I mean, companies will as well. It's going to reduce their profits. It's going to eat into their general profit and loss. But yeah, ultimately, it's going to be us as well. We're going to see an increase in price on anything that comes from the US or anything that goes into the US from these countries with these mutual tariffs. From Meduardo, how do interest rates affect stock and bond prices? Really, really good question. So typically there is an inverse relationship between stocks and bonds. So that's what we're seeing at the moment. People are pulling all of their money out of stocks and putting them into bonds. So the coupon rate, the interest rate that bonds are offering are coming down because more people want to buy the bonds, so they don't need to have them that high, right? Then when typically the stock market is doing well, everyone pulls their money out of bonds, puts them into stocks and shares. So bonds have to increase their coupon in order to try and lure people back into bonds. So that's typically how that works. Of course, there are outliers to that situation, but there is an inverse relationship between those. From Autumn Danae, what would your advice be for a beginner who knows nothing but wants to start investing? Again, I would start with budgeting and planning and making sure you know how much you've got to invest, looking at your debt and everything else as well. And then a course is a good place to start. Typically, when you're just getting into investing, you don't have the funds to afford a private wealth manager or planner or advisor. So yeah, again, drop me a message. I'll give you some pre-access to a certain feature on the course, which will help you in the very beginning. From Goot, is $50 too small to invest in anything outside of a Roth IRA? If you're looking at contributing $50 a week or $50 a month, nothing's too small when you can just start building it up, and everyone has to start somewhere, right? The whole point of investing is you take something small and you grow into something big. So yeah, when you're starting with something that size, it can be difficult because a lot of things have intrinsic fees which would eat into it and be a big portion of it. For example, I have an ISA investment account which charges me £5 a month to keep it. If I'm only putting $50 in there, then that's over 10% per month that I'm paying in fees. So you'd have to get a fee that was a percentage based rather than a fixed fee if you're going to look at something that small. From George Nodwell. On another note, I would adore an investing basics lesson from you. I'll leave the rest of that out. Investing basics lesson. One thing I'm going to do when I do put out this course is do webinars every couple of weeks or so on the subjects of investing and budgeting as well. From George, I've read these back to front. What stocks, ETFs, or indexes are you planning on buying at the moment? S&P 500 ? I am personally not investing anything at the moment. And that doesn't mean that no one should be. It is specific to my personal circumstances and where I'm choosing to invest my money. And yeah, right now I'm not putting anything else into the stock market. I'm investing into a business setup that I'm working on. That doesn't mean that it's not right for everyone else. And the S&P 500 has been one of the most consistent markets in the history of the world. I do believe it's going to bounce back from this. But in the short term, be prepared that you might not. And again, dollar cost averaging is a pretty safe bet to look at right now. From I'm Nowhere, good time to invest now. Again, same answer as those before. Could be, could not be. It depends on your stomach for risk. Best pickup lines to use on a finance guy, from Karishma. God, I can't think of any. I don't think I've ever had any finance bro pickup lines used on me. It's probably a good thing. I don't know. Maybe I'll think of something by the end. From Crackham, platforms you use to keep updated with the market aside from Bloomberg. Yahoo Finance does a good overview. I use some heat maps to sort of see which stocks are rising and falling. I use FinPlan. I use FE Analytics, which is a paid for thing, so you probably wouldn't use this unless you're a financial planner, but that's a really good tool to compare all of the stock markets, and of course the Financial Times as well. From Ariana, as a beginner, where do I start? Again, just drop me a message and I will help you with like the intro to my course. From Mehassan, advice for beginner investors just starting my finance degree. Again, start early, and if you're just starting and you're in uni now, going in for your degree, you're going to be in for the long term. So yeah, just keep compounding it as often as possible. From Anne-Sophia, it's a good idea to invest now or should wait. Again, depends how comfortable you are with it going up and down. Everyone, I wanted to answer like everyone's question, and so you hear your name called out when you contributed. But I'm going to stop with those ones now of whether it's a good time to invest now or should you wait, just because I've answered that one a couple of times. It is completely down to you. And to summarize it once more, if you are comfortable with the idea of it dropping by another 20% before it comes back up, maybe even another 30%, then sure. If you're not comfortable with that thought, then now's not the right time, I don't believe. Okay. From Nani Nano, is putting down 1K a month for savings a good idea, or should I invest it instead? I would generally recommend investing it once you have a suitable level of emergency funds saved. For emergency funds, I typically look for 3 to 6 months of disposable income available. And if you've got that in cash, then I would be looking to invest the rest. And the fact that you're looking at 1K a month means you'll automatically be dollar cost averaging. So I would probably be looking to invest it in that situation. Okay, from Violet Pixie Lux, I've just lost a lot on my 401k. Should I withdraw it and put it into a CD for 3 years? Again, if you're going to be in it for the long term, it depends when you're going to be planning on retiring and how dependent you are on that specific 401k. I can't give you a definitive answer on that, but if you want to have a chat with me, drop me a message and I'll have a look at it in a bit deeper detail. Okay, from Mo on Artemis, how to leave pay later / credit card cycle. Drop me a message, Mo. I've built a tool to help with debt planning and how to help pay it off. I know how tough it can be when you're in that cycle. The first thing I would say is cut out anything that's not an absolute necessity. Like no new clothes, no new shopping, no toys or anything like that. Like the maximum you should be putting on there is food if you literally can't afford to have it yourself. But again, drop me a message. I have a tool that will help with this. From Christy Jans, how long did you study finance and what was the most difficult field to study? Good question. I would say about 4 years in total, because you don't stop studying once you start. Like that's when the studying actually starts. You can do your qualifications and everything. But when you're actually working with clients every day, then that's when you really start learning. The most difficult field to study, probably UK pension law, just because it's so complicated. It's more for legal reasons that's difficult than anything else. From Daniel Bailey Twin, it'll be good in the long run, cheaper entry point for everyone. Love the optimism. From Sif Morsi, most effective way to get a job in the market. I'm guessing you mean in finance. I'll tell you a quick story about how I got into it. I went and did my degree quite late. I was like 24, 25 when I started my university degree. I did a fast track course so I could do it in 2 years. And then I was trying to get into finance. And I was applying to every company in my local area. Because most companies, when you get in, they will put you through your qualifications as you work and they pay for them. So that's obviously nice to get paid to study at the same time. No one looked at it twice. I didn't get a single call back. So I had to make a statement. I paid for the qualification myself. It's supposed to take 1.5 years and I did half of it in a month and got 3 exams completed. And then when I was submitting my CV with that on there, everyone wanted to talk to me because they were like, that's crazy, right? To do it that quickly. And the thing is, anyone could do it that quickly. It's not that I have anything that anyone else doesn't. I just have the drive to do it because I needed to get into this. I needed to play catch up on life because I left working seriously quite late in life. So yeah, if you want to get yourself noticed by employers, start getting the qualifications yourself. If you're in the US, look at getting your Series 65. If you're in the UK, look at doing your DIP PFS. And if you're anywhere else in the world, then I've not done those qualifications, so I'm not the best person to ask. Okay, what's your stand on the tariffs from Daily Dose of Cons? Oh, mate, honestly, anyone that pretends that they know what Trump is doing, unless they're on his inner circle, like they don't. No one knows. The major economists don't know what he's doing. They're playing in a game that we don't even understand the rules of, right? It's global politics. We're not politicians. And this isn't a financial game he's playing. It's a political one. It's a power move on the rest of the world. And I hope and pray that he knows what he's doing and he has some master plan and he's smarter than us. And I'm not saying that sarcastically. I genuinely hope that he does, and he is, and we will all see this come to some kind of global peace fruition. Do I believe it will work out like that? No. Do I think there's a chance he's a megalomaniac? Yes. Do I think it'll all be all right in the end? Yes. Okay, from the Marcy Granger, if someone files USA bankruptcy, will that affect their relocation to another country? Possibly. It could do. Some countries do ask about your financial status and whether you've declared bankruptcy before giving you visa status to enter there. It's a possibility. If you're just going to holiday, probably not. But yeah, if you're looking to get like a permanent residency or a visa, then it may do. From Michelle Patkowski, if you had just got 1.1 million US dollars, what would you think is the safest investment right now? Rental property? ? I have started advising some clients to get into property, and even some of my higher risk clients to just diversify out of it. The problem with property is it can be so hard to know where the right place to start is with it. When you're looking to buy your first home, it's very different from buying an investment property where you're purely looking to make the most money possible. And you don't want to end up getting a property that has nightmare tenants and you end up giving yourself a second job running it either, right? So in my industry, I have connections which are specialists in investment property. So if you're looking to get into that and you want to start using property as a means to make money, then drop me a message and I can introduce you to the best place that's a fit for you. That's an open offer to anyone, not just Michelle. If you're looking to get into property and you want to use it to make the most money possible rather than buy your dream home, I can help with that. So drop me a message. But yeah, I have started to advise clients to do that because the markets are just so uncertain, right? And for me, I earn more money when all of my clients just invest their money with me and I manage that money every year. That is how I make my money. But I have been recommending to some of my clients that they put their money somewhere else where I don't get paid in order to diversify their portfolio. And at least then when we have these conversations, when their portfolio is dropped by 10% in a week, they know I've got their best interests at heart. So it's thinking long term for me, building the best relationships, giving the best advice, even when it's not, necessarily in my best financial interest. From Bubbly Kimmy, what are your thoughts on the Trump tariff announcement and the US stock market to buy the dip? That was Daily Dose of Cons question there. So hopefully that one's already answered for you, but thank you for the question. From Mama Tonya, not a question, but I'm holding on to my money very tight, very worried. It is an uncertain time for everyone right now. And if you can think long term, it's going to be okay. Short term, we might be seeing some more dips. From Carlos Sandwich, is every man in finance 6 foot or something? Sorry, had to. No. From Last Wit Wicken, do you want to give a talk about finance to college students for free as an industrial guest lecturer? I've actually done this quite a few times, and yes, I'm always happy to do that. If you are a lecturer or if you're at a university and you want me to come in and give a talk, I am happy to do that. One of the reasons I wanted to build the finance course was so that I felt I could help loads of people at once, because my work is very much one-to-one in most cases. I'm so always happy to do a talk at schools, at universities, or anything like that. From Mind Yourself 483, simple monthly budget plan. Drop me a message. I will send you the tool that I built to help with this. From Mitchell96, when are you making an OnlyFans to make yourself rich? Never. From Fabiola Vanilla. It's my producer there booing the OnlyFans. From Fabiola, if I buy a dress that's 50% off, I'm technically generating alpha. Is this positive ROI? If this question was from anyone else, I probably wouldn't have read it out, but Fabiola has been a long-term supporter of the podcast, so I will read out her ridiculous question. No, if you buy a dress that's 50% off, you are not generating alpha, and it is not positive ROI. I think it's what you guys refer to as girl math these days, but hopefully that doesn't get me cancelled for repeating it. Yeah, silly question, but I hope the dress was nice. From Tracy Boz. I'm 57 and my husband is retired. Do we leave our investments and wait it out, or? Drop me a message, Tracy. And again, I can't give you financial advice based on that one sentence, but I will offer to do you some retirement planning and help you forecast out the variables and help you make a more informed decision. From Hector Gomez, how can I save if I have debts to pay? Typically, debts being paid off is the priority. But if you think about your net worth can be plus or minus, and often people have things that are adding to their net worth and taking away from it. So no doubt you have some assets already, and then you also have the debts. Whenever you're paying off the debts, you are also increasing your overall net worth. So you are saving by doing that. It just needs to be the priority because typically they have high interest rates and those interest rates compound as well. So you want to pay them off quickly. Again, I have a tool to help you manage paying it. So drop me a message if you want, a chart that you can clearly plan it out on and work out which debts you should be paying off first. Hafiz Modsin, may I know what is the best retirement plan or strategy? There isn't one for everyone because everyone is in a very different situation. If you want to talk about yours, particularly if you're close to retirement, then I should be able to help. If you're quite young, then all I would say is just start putting money away as early as possible. Have it in the stock market invested. It will compound over time and you'll be good. Only a couple more questions here, guys. From Alexandra Lucas. How to prepare for the uncertainty and possible flash crash if you just started investing with a small deposit? That's a good question. It's just mental preparation that you're in it for the long term, and you described it yourself as small. So don't be too disheartened. Over time, that will build up, that will become big, and this will just be another blip in the history of blips. From Anand Debalsamingham, are we headed for a recession? We are due one. It is very likely. From Norsink, I have 120k USD in savings. What can I do to grow my money? You can invest it. You can put it into fixed deposits and you can put it into treasury notes. I'm assuming that because it's USD, you're in the US. You could get a rental property with that money as well, which again, that I could help with, or you could look at just doing bonds and looking at putting it into fixed deposits for the short term if you're not willing to risk it falling. And if you are willing to risk it falling, then now could be an opportune moment to put it into the stock market. From Ig Shaika, as an accounting student, finance gives me headache. You finance people must be really smart. I don't know if you've got to be that smart to be good at finance. You need to be good with people and managing them and their expectations. You need to be quite good at maths, and then you need to just be good at listening to people and not have a big ego, and then you can just listen to Financial Times, Bloomberg, stock market, and everything is where we get our news from. And most people in my profession, we're not studying the markets from the bottom up and the top down and looking at company books. We don't have time to because we're with clients all the time. So we just take all of that from people smarter than us, and then we relay it in an easy to understand way to our clients, and we make good decisions based on that information coming in. Kind of a simple job. From Michaela Krishna, please could you share channels of YouTubers that you found helpful for investing? Again, I don't really get my education from YouTube for this one because I work in the industry, but Dave Ramsey and Martin Lewis, good place to start. And also from Michaela, Investing for Dummies 101, lol, I found a lot online, but some contradict each other. That is unfortunately the way that it is, because a lot of people have agendas when they're sharing information online. If they're not getting paid to create the content, then they're probably getting paid through selling something through the content. And even like in fitness and nutrition, you're always going to find people with contradictory information. If you are looking to get involved in a course, then drop me a message and I can give you a taster of the one that I'm going to release this month. And I think just from the amount of people that are kind of asking questions, which is making me answer about the course, I think I'm probably just going to do an early release before it's ready and people can just use it and ask me questions. So if you want to get involved in that, then drop me a message. I will give you access. From Natty Larone, do you have any advice where to invest money online that has a good investment? I take it you're looking at platforms online. That's hard to say because I don't know where you're from, and different platforms have different availability in different locations. Generally, one that is suitable for a lot of people throughout the world is interactive brokers. I have no affiliation with them, but they are just available in most places in the world. But again, hard without knowing what your goal is, what you want to invest in, and most importantly, where you are based and where you're from, to give you a definitive answer on that one. From 1878 Restoration, is whole of life insurance worth it? Good question. Again, need to know more about your situation in order to give the best answer. It depends. If you have dependents, as in a family, if you have kids, if you have a mortgage or other debts, then it would be something that I would definitely be looking at. Typically, when I'm doing people's financial planning, I look at their protection first. I make sure that they have protection in place before I look at the investments. So let's make sure that they're covered, and if anything happens to them, their family is going to be okay. Then after that, we can start looking at investing and making more money. From BRB Hube. Hi, is this a good time for a first-time investor to start investing? Honestly, to that one, I think I'm going to give a pretty blanket answer of no, because it's pretty hectic for, an investor when you compare it to other times. But does that mean you shouldn't? No, it doesn't. If you are looking to invest again incrementally each month, I think it could be a good time because you will learn about the power of dollar cost averaging. And over the long term, I am sure that the markets will come back. I think that's it for these questions, guys. So I just wanted to say thanks so much for coming in with those questions. If I've missed anyone, I'm very sorry. It looks like all of the sensible ones I got to. If you asked silly questions, then yes, I deliberately avoided those. But yeah, hopefully you found this helpful. And again, if anyone is more uncertain and needs more guidance, you can reach out to me and I will do my best to help you get started in the right places. But yeah, it is not a easy time for anyone investing at the moment. We're playing a long-term game, most of us, and I am positive that over the long term, this will just be another blip and will be good. So stay patient and remind yourself that it is a long-term game. Thanks for watching.